I did engineering in my university, and then I started my career as a fund manager at Hargreaves Lansdown. This is when I met up with Peter Hargreaves. And then later on, I joined Artemis, New Star, Nevsky Capital, running different strategies over time. And after about 15 years, I decided to kick off to launch Blue Whale Growth Fund back in September 17. And then I've been the chief investment officer, at the same time, the lead manager of the strategy for the last 7 years. So I think this is a very interesting one in terms of what is the role of active managers. So I perceive that the role of active managers is to outperform not only your peer group, but at the same time in today's context will be passive trackers. And of course, when I look back throughout my career, the challenge over time is all about the efficiency in the market has been increasing over time, right? So you would probably think certain strategy or certain way of analyzing companies 20 years ago would have worked at the time, but over time it's no longer working. So I think it's very important from an active manager perspective, including us, to continue to evolve with the market, to adjust the way that you manage money, to refine the investment process that you have so that you can remain competitive over time. So this is an ongoing challenge, and we've been doing quite well so far, but that challenge would continue in the next many years to come. It's very simple that we aim to invest into high quality businesses at an attractive valuation. But of course, the ultimate goal on the back of this is to maximize investors' return. Because if you think about what people are after they have invested, let's say using a time horizon of 5 years or 10 years or 20 years when you're investing for pension, you want to receive the biggest pot possible. So from our perspective, our role here running a global strategy is to maximize the return potential, trying to analyze or compound the rates of return at the highest number possible over time so that investor would be able to get a bigger size of their pot when they want to take their money out in time. So the way that we go about research is to do all the research in-house. So we go through primary sources of information through annual reports, transcript conferences about our companies. And at the same time, there are 5 of us on the investment team. So we're really focused in terms of the coverage. And on average, each one of us will be covering 5 companies on a full-time basis. So you can expect the level of research that we'll do or the understanding of the business that we invest into would be very much in depth or very much detailed. And once we have done that, we'll build financial model for every company we have. We will make forecasts in terms of the earnings projection, free cash flow projection over the next 3 to 5 years. And this is when we would then see whether we have a differentiated angle versus what had been expected by the market to remain ahead of the consensus. At the same time, we also will look at valuation metrics such as free cash flow yield adjusted for that to make sure that the valuation of our company remain very compelling. And we will repeat this process at least at a minimum of once a quarter when we have new information from the companies, and then we just keep doing it to make sure that the portfolio of companies that we invest into would be very competitive and at the same time would be able to deliver significant outperformance potential. The strategy started back in September 17, and we have managed to capture just about 15% per annum net of all fees. And if you look at the last 1 year, 3 year, or 5 year number, we are in the top quartile, so we have done very well over the last few years. But I think the important point to note is obviously, the fund's performance doesn't go up in a straight line, and if you look at the chart, you will have seen that we underperformed in 2022. But what's really important from an active manager perspective is you would reassess to look at your portfolio with a fresh pair of eyes and making sure that the portfolio is ready for the next set of challenges in terms of the macro, geopolitical uncertainties, inflation or artificial intelligence, and then you try to position your fund accordingly. And we did that quite well back in 2022, and hence when you look at the 1, 3, 5 year number, that is very compelling return that we have delivered for investors.